Once again, we have Dr. Thomas Carr here with us this afternoon. Actually been working with him for quite a while now. He's the founder and CEO of Befriend the Trend Trading. He's the author of 3 books, 2 of which are best-selling books, and he's going to be covering a lot of the philosophy from those books within this webinar. He has extensive experience in multiple different financial markets. In 2002, he founded Befriend the Trend, and it's an investment advisory service offering 3 daily market letters, various trading seminars, etc. We love doing presentations with him. We're excited to have him again here today. Dr. Carr, are you there?
Yes, I am. Can everybody hear me just fine?
Yes, we can. I'm going to go ahead and turn the presenter link over to you, okay?
All right, sounds good. Let me go ahead and open up my screen, and you should now be able to see the PowerPoint that I've got presented here.
Looks great.
Just want to welcome everybody to this webinar. We're going to be going over a number of things, and I'll give you a little preview of what's coming up. One thing to keep in mind as we're working through this material is that toward the end of the webinar today, in about an hour's time, I'm going to be revealing to you 2 stock trading picks that showed up in the MetaStock Trend Trading Toolkit when I ran the screens this morning, and both of them are looking quite good after today's trading. Today's trading was a little bit on the weaker side, has been for a few days, but more on that in just a moment. Let's go ahead and get started. I want to thank MetaStock for inviting me to come and speak to you all today, and as was mentioned in the intro, I have been working with MetaStock for a number of years now, and we work together to build into the MetaStock software the trading systems that I taught in my first 2 books, and in fact a couple of systems as well for my 3rd book. And so if you're a reader of those books or have read them or have heard about them and have had difficulty implementing the trading systems described there, then you're in good shape here, because the toolkit will do just that for you. All right, so I've been introduced. I don't want to say much more about myself, but I did want to fill you in on a little bit of the story of the company that I founded, just so you know where I'm coming from in terms of my background as a trader and investor. I am not a financial professional at all. I have graduate degrees, too many to mention, but they're all in the area of philosophy and theology, religious studies, and I was a professor of religious studies and philosophy for 17 years, but then resigned that to take up this trading full time. But I began my trading journey back in 1999. I was a brand new professor back then and had a little bit of extra money from some summer school that I taught. I opened up my first trading account with the thought that I could use that to supplement my rather meager professor salary, and I got involved in an online discussion thread called Silicon Investor. I think it's still going, but it's not nearly what it used to be back then. And I banded together with a number of like-minded traders, and we started to cobble together a number of trading systems. We were all looking for the holy grail in the market. Something you could just click a mouse, it would tell you exactly what stock to buy. You would buy it, a couple of weeks later you'd sell it, and then rinse and repeat. It was never quite as easy as that, but we did learn a lot together in that group, and I was able to use that knowledge to launch my first trading letter back in 2002 called the Trend Trade Letter, and here we are in 2016 and we're still going strong. We've published it every market day for 14 years. It's got a pretty decent track record, I'll have to say. It's I'd say around the mid-30s ROI per year on average, and it's got a good following, good healthy following, and that's our flagship product that we sell through the drstoxx.com. We sell a subscription to that monthly, quarterly, and annual. And then in 2007, McGraw-Hill approached me and asked if I'd like to write a book describing some of the trading systems that I use for the Trend Trade Letter. So I did. And in 2007, Trend Trading for a Living came out in print. And much to my surprise, much to the publisher's surprise, it became a kind of bestseller. And it's been published now in Chinese and Japanese and Korean and other languages. And also in 2007, I launched my second trading letter, the ETF Trend letter, which follows a number of key ETFs, especially the leveraged long and short ETFs. And we trade gold and small caps and biotechs and all that sort of thing, natural gas, etc., using ETFs in that letter, and that's had a very good track record. And then in 2010, McGraw-Hill asked would I like to write a follow-up book. So I did. Micro Trend Trading came out to 2010, and it's aimed at the at short-term trade. So it's more of a day trading, short-term swing trade book. And that same year, I also launched my third market letter, the Daily Cheap Stocks letter, which has an even better track record than the ETF Trend letter, which has a better track record than the Trend Trading letter. So we've been improving as we've gone on over the years, which is to be expected, right? As you gain more experience. And then in 2013, after doing a lot of research, 2 solid years of research and training under a number of market professionals in the area of fundamental analysis, I launched our brand new site, drstoxx.com, which is going strong today. And then I came out with my third, and what will probably be my final trading book, Market Neutral Trading. Market Neutral Trading is a series of long and short pair trade systems that harness not only technical analysis but also fundamental analysis. And I've been combining those two forms of analysis ever since. And I'll have to say that those 2 years of training in fundamental analysis has greatly improved our overall returns and has reduced our drawdowns. And then in 2015, I launched my 4th and 5th letters. The Momentum letter is sold at the drstoxx.com site. It harnesses both technical and fundamental analysis, and it is by far our best performing letter. It's averaging over 80% return per year. And then I also launched a sister site for long-term investors, which focuses almost exclusively on fundamental analysis. We use technical analysis to time our entries, but we're looking at buying stocks for the long haul. We are averaging about 18 months in each position, and we've been averaging over 70% per closed trade and about 65% overall return for the letter. That's the ichthusletter.com. And that sort of catches us up to speed on where we're at now. Of course, we're always looking at new things, always trying new things. But right now, my focus is more on educating people on how to trade for themselves. Still selling all of our newsletters, and they're still going strong, but beginning to shift my focus more toward the educational side of this business, because I'm just at that age now where it's a lot more rewarding for me to work with individuals and with groups, small groups, in teaching them how to trade rather than telling them what to trade. So if any of that is of interest to you, hang on toward the end today. I've got a little bit of a coupon I'm going to throw out your way if you want to try some of our services at a discount. There's the Ichthus letter. Okay, so this is what we're going to go over today in our webinar. We're going to first look at the Stoxx Trend Trading Toolkit, which, as I mentioned, harnesses the exact systems that I taught in all 3 of my books, primarily the first book, but you'll see several systems from the other books. There's number 2. And then we're going to look at how to build a best practices watch list for trend trading purposes. Thirdly, we're going to show you how to use the Trend Trading Toolkit to determine market direction and market character, and I'll explain that in a little bit. And then lastly, we're going to look at a great trend trading setup for you to consider for tomorrow's trading, since we're now at the close of trading today. So we're going to look at actually 2 setups that you can consider for tomorrow morning. First off, let's introduce the Stoxx Trend Trading Toolkit. I worked with MetaStock, gosh, I don't even remember how many years ago now, to put all of this together, and it's only been improved over time. And it is one of the largest toolkits that MetaStock sells. If you're not familiar with the MetaStock software, then you might do yourself a favor and just take it for a bit of a test trial run and take a look at all of the various features that it has. The toolkit that was developed by MetaStock is what they call an add-on, so it won't come with the base package of the software, but you can add it on to the software, and you'll get some details on how to do that at a discount after today's webinar. And if you do so, then you will see this show up under the Explorers tab. So what I typically call a trading screen or trading scan, in other words, a pre-programmed technical analysis scan that will go into the market, scan through thousands of stocks, and pull out only those few stocks that satisfy a host of filters that have been proven profitable. What I call a scan or a screen, MetaStock calls an exploration or an explorer. And with the Trend Trading Toolkit, you're going to get 14 of those guys. And all 14 of these come from my 3 books. The mean reversion scan you see here at the top comes from our 3rd book, the Trend Market Neutral Trading book. And then the blue sky, the bullish base, the coiled spring, the bullish divergence, and the pullback, all those come from my Trend Trading book, the very first book, Trend Trading for a Living. And you'll find also the inverse of those, the bearish coiled spring, the bearish divergence, etc. And then you'll also have here the pre-filter high beta watch list, which is what we're going to talk about here in just a minute. It's a great part of the Trend Trading Toolkit that will enable you to build the best practices watch list, to which then you can either apply your own trading systems or you can apply some of the parts of the toolkit that we'll look at in just a moment to the stocks in that watch list, and then you'll get alerts whenever you get a fresh buy signal or sell short signal. So again, the pre-filter high beta watch list, it goes into the market, searches through the thousands of stocks on offer, and pulls out only the very best stocks for trading, the very best trading stocks. And I'll show you why they're the very best here in just a moment. And then you'll also get, well, this is a little bit of a unique feature to the Trend Trading Toolkit. For each of the explorations, you have the ability to go into the exploration itself and dig down into the parameters of it and tweak them if you like. You may not want to do that, you may not know how to do that, but if you want to do that, you're able to. All of the coding involved in each one of the explorations here are fully disclosed, so you'll know exactly what it is we're looking for. And for each one of those explanations, you're going to get the thesis statement, which is, what I wrote in to tell you exactly why we're using this exploration, what it is we're looking for, and it will give you a sense of why it's so profitable. The exploration process itself couldn't be any easier. It's a 4-step process. You first select the exploration that you want to focus on, and in fact today we're going to be looking at a couple of pullback trades for tomorrow's market. So I have highlighted here the long pullback setup. You would simply toggle that on, then you would select the universe of stocks that you want to scan through. You can do all American stocks if you want. You can do foreign securities if you'd like. You can be a little more of a, do something a little more subset than that. You can do New York Stock Exchange, big board stocks. You can do NASDAQ stocks. You can do all optionable stocks. You can do small cap stocks, etc. S&P 500, S&P 600, Russell 2000. You can apply the long pullback exploration to just a subset of stocks if that's what you want to focus on. And then thirdly, you're going to select your time period. So we're going to be looking at daily charts today, but if you wanted to scroll down to, say, the hourly chart or the 15-minute chart, the 5-minute chart, the 1-minute chart, you're able to do that, which is another way of saying if you wanted to apply any of these explorations to something like the forex currency pairs, you're able to do that. If you wanted to apply this to the E-minis, you're able to do that. And if you wanted to do it, on a micro trend basis, so you'd scroll down to the 1 or 2 or 3 minute chart, this is where you would select that. You're also able, if you wanted to, go back in time and find a set of stocks from, say, last week or a couple of weeks ago or a few months ago and see how they did over time. You're able to do that right here. Then fourthly, you simply click the start button, and depending on how fast your internet speed is, you'll have to wait either a few seconds or a few minutes, and then it will spit up for you a list of stocks, and you can either put a little bit of money into each of those, or you can drill down a bit into some of their fundamentals, or take a look at longer term charts, however you do your further scanning process. But what you will know from the start is that you now have a list of stocks that are poised technically to do very well going forward, either on the long side or on the short side. So that's a brief description of the explorations themselves that you'll get in the toolkit. Let's look at how we use, and by the way, there are a number of other things in the toolkit we haven't explained yet, but we'll get to those in a moment. Let's look now at how to build a watch list of the best trading stocks using the Trend Trading Toolkit. Now here's what we're looking for. When I mentioned that what we want to do here is build a watch list of the best trading stocks available for trading at any given time, this is what we're looking for. Our goal is to build a list of around 40 to 60 stocks. 40 is kind of the minimum I like to work with, and anything over 60 I find to be a little bit too much to keep track of. So about 40, 50, 60 stocks, all of which have these three things in common. They have above average daily trading volume. The average stock trading today, if we weed out over-the-counter stocks and bulletin board stocks and pink sheet stocks and ADRs and things like that, if we weed out those guys, then we're looking at stocks averaging around 100,000 shares per day. We want something above that, well above that. In our Trend Trading Toolkit pre-filter high beta watch list exploration, we're looking at stocks trading around 500,000 shares a day. So we want liquid stocks. Secondly, we want above average volatility. Now, average volatility is usually pegged to the S&P 500, which is, the 500 biggest stocks in the market universe trading today. So it's a fairly low beta instrument, and it's given a rating of 1.0. 1.0 means a stock at 1.0 beta is as volatile as the S&P 500, which is to say it's not very volatile because the S&P 500 is not very volatile. We want stocks that move up and down quite sharply. We want stocks that if the S&P 500 goes up 1%, our stocks are going up 2% or more. If the S&P 500 goes down 1%, and hopefully we're short, then we wanted to see our stocks go down 2% or more. So we're looking at above average volatility. And thirdly, we want them to be priced in what is called the sweet spot of swing trading, short-term trading, and that is above $10 per share, but under $50 per share. Now, sometimes you'll have to adjust this a little bit. If market is in a very sharp downturn and stocks are falling in price, we may have some of our best trading vehicles priced under $10 per share. So we might have to lower this to $9, $8, maybe $7.50. In a strong bull market, we may see some really great trading stocks go above $50 per share because everything's going up, and we might need to raise this a little bit. But generally speaking, that's the sweet spot. Why is it called the sweet spot? Well, generally speaking, stocks under $10 per share tend to be too high risk to enable a sustainable, profitable trading career over the long run. If you're only trading stocks under $10 per share, and I trade stocks under $10 a share. In fact, occasionally I'll trade stocks under $1 per share, but I have to make sure that I'm putting very little money into those, and most of my stocks are priced in the sweet spot, because otherwise I'm taking on too much risk, and I'm running the risk of not having a sustainable trading career. If stocks are above $50 per share, however, they tend not to move nearly as much as we'd like them to. We tend to be reducing our profit potential. Nothing wrong with stocks over $50 a share. I'm in several right now, but I need to make sure that I'm putting the majority of my money in this price range right here, because this is the sweet spot. Our risk is lower, our profit potential is higher in this sweet spot. Okay, so with all of that said, those are the three things we're looking for when we build our watch list, and this is how you would do that using the Trend Trading Toolkit. You would first run that pre-filter high beta exploration that I mentioned. It's a four-step process. Once you click the start button, then it will come up with a list of stocks without any further work on your end. Then secondly, you're going to create a technical template for your watch list charts. Now, if you're using the toolkit, you don't need to do this because that template is already made for you. You're going to get five or six, anyway, I think it's at least 5 chart templates that come with your Trend Trading Toolkit. You'll get a list of those, and those templates are used on some of the different explorations. So if, for example, you're wanting to focus on the pullback, then you would apply the pullback chart template to your charts. Excuse me. If you're trading the mean reversion system, you would apply the mean reversion chart template. And if you're trading any of the other stocks, you would any of the other explorations, you would apply the exploration for that particular system. And there are a few systems, a few of the explorations that don't require a particular template. In that case, you would just use the standard template that we have included in the Trend Trading Toolkit. Now, your template should have the 20-period moving average, the 50-period moving average, and the 200-period moving average. Those are your 3 big general dynamically changing moving averages that you'll be using to determine trend and support and where you're going to put your stops and that sort of thing. And then as options, you can add on a few oscillators and indicators, the stochastics, the commodity channel index, the MACD, the Bollinger Bands, the relative strength index, on balance volume, and so on. Whatever list of technical indicators you're most familiar with, you would overlay. And then you would eyeball the charts for technical setups using your own trading systems, or you would apply an expert advisor to any chart of interest. Now, the expert advisor, that's something we haven't mentioned yet, but with your Trend Trading Toolkit in MetaStock, you will have, and forgive me for not remembering the number, I think I have it later in the PowerPoint, but you will get a number of expert advisors, and these are real-time, live, dynamically changing system setups that you will apply to a stock of interest, and it will tell you exactly what signals were given, long or short, from that particular exploration in the past. And then it will immediately signal you whenever there is a new exploration signal in the present. This is especially valuable if you are doing the day trading systems. And there are 2 day trading systems that come with your Trend Trading Toolkit, and both of them exist as expert advisors. So these are the day trading setups you're not going to use to scan through a bunch of charts at night. You're going to only use these 2 day trading systems during the day in real time as the market is unfolding. And they will fire off 4, 5, 6, between the 2 of them, they'll fire off half a dozen to a dozen signals each trading day. You'll get them in real time. You can set an audible alert. You can set an email alert, however you want to learn that. But you'll know exactly when to buy or sell. With each expert advisor, and they're expert advisors not only for the for the day trading setups, but also for all of those explorations that you saw. You'll get exactly where to buy, what price point to buy at, where to set your stop loss, and where to set your target price. A little bit more on that in just a moment here. Here's that pre-filter high beta watch list, and if you did not want to do what I just mentioned in the past, in this previous slide, you wanted to use the toolkit to build that watch list, all you would have to do is run this exploration right here. It does all the work for you. You're going to get those 40 to 60 stocks right priced in that sweet point, all high beta stocks, all liquid stocks. And that's a great place to start. It's a great place to start your trading list right there. Okay, now how to use the toolkit to determine market direction and character. This is one of the sort of happy unintended consequences of the Trend Trading Toolkit. We didn't actually design the toolkit for this purpose, but I have been using these systems for years for this purpose, and you'll be able to use the systems for the same purpose as well. And let me show you what I mean if that doesn't make any sense. Don't worry. There are two pairs of systems that you can use to determine market direction and market character. The long blue sky breakout is a very bullish momentum exploration, a momentum trading system, and it's very bullish. The blue sky breakdown is a very bearish momentum trading system. The blue sky breakout looks for stocks making new short-term highs that are confirmed by breakouts in key indicators. So often you'll buy a breakout and it will turn around on you as a kind of head fake, and you'll kind of scratch your head, well, why didn't that continue up? It was such a nice price breakout. Well, it was because the momentum wasn't there, or the volume balance wasn't there, the stochastics weren't confirming. You want to make sure that your indicators confirm the price breakout. Blue sea breakdown, same thing, but it's on the short side. You're looking at stocks that are making near-term lows. Now, if you run both of these two scans, you're going to come up with a pretty healthy set of stocks on both ends. Sometimes I've had over 40 stocks return on either one of these. And if you compare the numbers of breakouts and breakdowns, you're going to get a pretty good sense of whether the market is uptrending or downtrending. If the market is uptrending, as we've seen it do lately in the last few months, right, ever since the election, it's been going up and up and setting new highs, you're going to get a lot more breakouts than breakdowns. Nothing strange about that, nothing surprising about that. Of course, when all stocks are going up and the major market indexes are going up, you're going to get more breakouts to the upside than breakdowns to the downside. Now, here's the interesting thing. When those two numbers start to converge on each other to the point where they become almost equal, that's a warning signal to you that the trend that we're now in is waning. It's beginning to weaken. It doesn't necessarily mean we're going to reverse and turn around and go the other way, but it does mean that we're pulling into a period of consolidation. The market is ready to pull back. The market has been pulling back. We're still in an uptrend market, has been pulling back, and we're getting to a place more of equilibrium. That's in fact where we are right now, because I ran these two scans this morning and we ended up with, let me just get my reading glasses here, we ended up with 37 breakouts and 33 breakdowns. Now those are numbers we should pay attention to, because just a week ago I ran both of these and we had over 40 breakouts, and it was the number of breakdowns were in the teens. So there were twice as many breakouts as breakdowns just a week ago, and now we're converging toward the middle, toward parity, which it tells me that the market is consolidating, which it is. No surprise there. But if we see that trend continue to the place where we see more breakdowns than breakouts, that to me is a signal that, hey, the uptrend is over. Sorry, lights out. Time to get defensive, time to put on some shorts. Okay, so that's how you can use those two to give you a very objective view on the market where it's been and where it may be going in the near-term future. Now here's another interesting connection. We have two other bullish and bearish explorations which are paired. The long pullback is paired with a short relief rally. They are the inverse of each other. And both of these, like the blue sky and blue sea breakouts, are described in detail in my first book, the Trend Trading for a Living book. Now, when you are in an uptrend that has been correcting over a period of days, that's exactly where we are right now, you're going to get a lot of pullback stocks passing through your screen. Maybe not a lot, but you're going to start to see more pullbacks coming on your screen, coming on your exploration than you had been seeing when the market was very strong. What that tells me is that when I start to see this number go up, when I start to see pullbacks go up from like 3 a day to 5 a day to 10 a day, I know that we are in an oversold condition and we're about to go back up again. So that's a great signal right there. It's a short-term signal, but it's a very good signal. It gives you a lot of confidence that, hey, this pullback, this correction in the market is nearing an end. It's time to get back on the long side. And the very converse is true when the market's been in a downtrend and you're not getting any relief rallies at all, because in order to get relief rallies, we have to see a rally in the midst of a downtrend in order to start triggering some of the signals here. But when you start to see these numbers go up, 3, 5, 7, 10, every time you run your exploration, then you'll know that the little relief rally we've had, the little correction in the bear market we've had is about to end. It's time to get short, again. Now, I ran the numbers this morning. We had 0 relief rallies. No surprise, because we're not in a downtrend and we've been pulling back. We got 5 pullback setups this morning, and I'm going to share 2 of them with you today because 2 of them look very good as far as I'm concerned. We had 3 a couple of days ago, and we had 0 pullbacks a week ago. So the numbers there are going up. They may still go up. We may still have a little more to go on the market correction, but it does tell me that it's beginning to run its course. Okay, so a nifty little way to determine market direction and character using the toolkit. Now, a brief word about the expert advisories, which I alluded to back then. You have 5 long expert advisories, 4 short expert advisories, and 2 intraday day trading expert advisories that you can use from the Trend Trading Toolkit. You're going to apply these to any chart of interest. So let's say, for example, you really like to trade. This is this chart of Tesla, one of my long-term buy and hold investing positions. We have this in the Ichthus letter. And let's say that I wanted to trade Tesla, and I want to buy pullbacks and I want to sell rallies. So I would apply the pullback expert advisory to this chart, and then I would apply the relief rally expert advisory to this chart, and I would set alerts. Every time a new signal came up, I would get an email, I would get an audible thing. It would come up on my computer when I'm trading, and I would know exactly when to buy or when to sell short this stock. And with every new signal, you're going to get exactly the buy price, the best buy price. In other words, we've designed the expert advisories to pinpoint a perfect place to buy, because near-term overhead resistance has been cleared away, and we should have a nice movement upwards in for the long pullback, for example, or any of the bullish ones. Or near-term support has been cleared away, and we should get the green light to go short any of these short systems down here. And then we're also going to give you in every expert advisory the best place to put your stop loss. And those are dynamic stops. So it's not that they change every day, but it's that they are designed to harness the volatility of the individual instrument itself. It's not just a standard percentage. And it's not, putting it above the 20 period moving average or putting your stop loss below the 50 period moving. It's not just that kind of thing. We're measuring the volatility of the stock itself, the day-to-day up and down movements of the stock, and determining the most reliable place for a stop loss so that you avoid getting stopped out, and yet you're also reducing your risk. So your stop loss is going to be a big help to you. It's going to tell you exactly where. And then it's also going to give you a target price based on trend. So you'll get the best place to put your target price, and then of course your stop loss will adjust as the trade moves either in your favor. It won't adjust if it moves against you, of course. You want to leave it in place. But if it starts to move in your favor and the volatility of the stock itself begins to change, you'll see the stop loss change as well. And that's something to heed, because you always want to have your stop loss in the most advantageous place. So you don't get stopped out, but you're also reducing as much risk as possible. Okay, so that's what you're going to get with the expert advisor. You're going to get all that stuff included. It's just, kind of takes all the guesswork out of it, out of trading. All right, now let's look at the the long pullback exploration, and then after we do that, we're going to look at two charts of stocks that you can buy tomorrow morning. You can't buy them right now because the market's closed, but you can go in tomorrow morning and set your entry. I'll tell you a little bit about where you should set your entry price for those trades for tomorrow, and I give you some advice as well on dynamic stop loss, where to put your stop loss based on the volatility of the stock itself. Just a quick disclaimer before we do look at those stock picks. These two picks are for educational purposes only. I'm not a registered financial advisor. I'm just sharing these ideas with you, one friend to another. All right, let's look at this pullback exploration. First of all, the pullback exploration was the very first trading system I developed way back in probably, well, it was 1999 when I began exploring trading systems in general, but the pullback system itself was built around the year 2000, and then we started marketing our trend trade letter based on it and the short version of it in 2002. And we had an amazing couple of years trading only this one system. Now, we happened to start the trend trading letter right at the very bottom of a bear market. So that was, just good luck on our part. So our first year was over 200% return. Our second year was over 100% return, and we were off to the races. But then as market conditions began to change, as they always do, we had to fill out our arsenal of trading systems quite a bit, because you'll always want to approach every market from a variety of angles. That means using different types of trading systems. You want to trade pullbacks, you want to trade breakouts, you want to trade consolidations, you want to trade deep cut lows, you want to trade extreme momentum highs, you want to trade stocks that are pulled way away from their median, and you want to also trade stocks that have pulled into their median, and on and on and on. So you come at trading from a variety of angles. That's diversification, and it's only the smart way to trade. But that's a long-winded way of saying that the pullback has been a bread and butter system for us, along with its sister inverse system, which is the relief rally system. You'll get both of those in the Trend Trading Toolkit. Just to show you the power of this pullback system, it works extremely well in an uptrending stock. And the system will only trade uptrending stocks. So you don't need to go around and find uptrending stocks. The system itself will find them for you. But it only works with stocks that are already in an established uptrend. It will keep you out of stocks that are consolidating. It will keep you out of stocks in a downtrend. It will keep you out of stocks that have just started an uptrend, because you need the uptrend to be established. So here's a stock. This is Illumina, which is a biotech firm out of San Diego, great big company. And this is an old chart from a couple of years ago when I last did this particular webinar. and Illumina hasn't been doing nearly this well in recent trading, unfortunately. But just to show you that there was only one loser in the six buy signals here. And one loser was right here. This is your entry candle, and then your stop loss was set, I don't know, somewhere around down here, and it got triggered on this low cut day here, unfortunately, just a little tight stop. These trades back here had a looser stop because of that dynamic character of the stop loss in this particular system, and they were not stopped out. This particular one was. But in any case, all the rest of them, the 5 other buy signals, all made good money. And if you took every one of those trading signals, you would have made 226% on this one stock in 11 months, which is roughly about the same as a buy and holder. If you look at where the stock was at the left edge and compare it to where it was at the right edge and took a percentage, you're looking at something over 200% return for the buy and hold. But the difference is that you're out of the market here probably about 30% of the time. You're on the sidelines because you've already taken your profits, and now you're waiting for the market to pull back. So when you're on the sidelines with this particular stock, you can take that money and put it somewhere else. So you're always catching the meat of the move, and you don't have to sit through these sideways consolidations. See, here's, the buy and holder has to, I guess, frankly, we are in these trades already. But if you're a buy and holder, right, you're going to have to sit through a lot of this stuff when the trader has already taken profits. The trade, this particular buy signal here hit its target probably on this upward gap. So now you're out of the trade for several days until you're back in again, and then you're out there, and then you're out of the trade, you're back in again, you're out of the trade, back in again, etc., etc. So during those time periods when you're out of the trade, you can take that money and put it somewhere else. Here's another stock, again a little bit old now, EPAM. I don't know anything about EPAM, but it was back then a great trading stock, and it did very well for us in the pullback exploration. And you can see there are six buy signals, and yeah, they're actually 6, not 5, and all 6 were winners based on the dynamic stop loss keeping you in the trade and taking profits at the target price. 74% in 9 months, of course, that's an excellent return, and this beat buy and hold by some margin, not a lot of margin, but again, you are not in the trade for some of that time, and you can put that money elsewhere. Now here are 2 signals that you can think about for tomorrow's market, okay? These explorations were run recently, and I still like them today. Now this one was actually one that came up on Tuesday's run of the pullback exploration. It's gone up a little bit since then, but just about 30 cents, so not a whole lot. I'm not sure where it closed today, but it should be something over $13 per share, and I'm going to say that you can buy this up to $13.50. Your dynamic stop loss is going to be under the 50-period moving average. You'll have to use the Trend Trading Toolkit to discover what the dynamic stop loss is, because I don't know it. I didn't check that myself. But I would guess if you put it under this 50-period moving average and keep raising it up, you'll be okay. And the trend analysis of this determines that $18 is your target price. And I would say you're looking at maybe a 3-month hold on this, maybe less. AMD, of course, it's big chip maker, right? Big competitor of Intel. It's been gaining market share on Intel with a number of new products. Intel's been a little bit slow to come out with some new products, and so AMD's had a great year, really great year. Here it's gone up about 250%, 150% in any case, but it's No, 200%. Anyway, so here you can see previous buy signals, something else you always want to check on. Previous buy signals have done well, really well. And here we have the third of 3 in a row. So I'm recommending, suggesting, not recommending, suggesting you to do further research on AMD for tomorrow's market. And I do like this setup quite a bit. And then here's one that has an even stronger looking chart, Soda, which is an interesting company. It comes out of Israel, and they made this machine, which is kind of the soft drink version of the Keurig, if you know that coffee maker that was so popular. And it was kind of a tough sell. I mean, they got to all kinds of great publicity and early on because it was a machine you could use to make soda at home, right? You could save all this money. You could put in ingredients that were healthier than what you'd normally pay for when you're buying Coca-Cola in the store. But then, you know, there was quite a backlash against soda in general, and people, I guess, decided it was too much work to create the soda or whatever. I don't know why, but the stock sort of fell apart, and then they retooled themselves and got away from soda, and now they're talking about using this same machine, but using it to make flavored water products, much healthier, right? Not all that sugar. And the stock has done really well ever since then. Well, so now we're in an established uptrend, and it has gone from, you know, $24 a share to 40-something a share, and I'm not sure exactly where it closed today. I own Soda, so I'm in this stock as well, but I really like this pullback here. A nice orderly 4-bar pullback into the rising 20-period moving average, and it has fired off a beautiful pullback buy signal with your stochastics down in oversold territory. You've got a little green candle today. I think it closed green. And if you wanted to be safe in both of these, in both Soda and in AMD, you would buy above the high of the day. Now, I said AMD up to 1350, and the high of the day was above 1350, so I might make an exception there. But because AMD has already cleared the high of the signal day, it's really good to go from here. And then for Soda, because this is a brand new signal, this just fired off today, I would wait until it cleared the high of today before you entered. And you could put your stop loss under the rising 50-period moving average. That's a bit of a wide stop, but you might also put it under this little tag down here, this tail down here. And your midterm swing target is $60 per share for a nice, what would that be, about a 25% return. So those are two recommendations or thoughts or suggestions, not recommendations, sorry, suggestions for tomorrow's market. Now, just to show you one other signal, one other exploration, I don't have any recommendations from this today because nothing that came through the scan looked all that good in my opinion. But this is the most profitable exploration. It's based on my mean reversion system, which you can find narrated in the Market Neutral Trading book from McGraw-Hill. I also sell a manual that describes just that system in itself from our website if you want to go to drstoxx.com. It looks at trading stocks that have moved far away from their mean, and we use the 20-period moving average to determine the mean, and are trading outside the standard deviation using Bollinger Bands to an X percentage degree, an unusual degree, in other words, and then are showing signs of reversing back into the mean. And you put all those factors together, and you've got a very, very profitable system. And the nice thing about this system is that the trades usually are very short, 4, 5, 6 days, 7, 8 days max, 10 days max probably. And you're looking at full returns in most cases. It wins about 68% of the time. And if you do it right, you should be hitting a profit percentage of about 15% within 2 weeks, and you should be stopping out at about 7-8% per trade. And again, 68% win rate. Here's a couple of examples. So SPWR is a high beta solar stock, it's had some tough times recently. This is an older chart, but you can see if you're a buy and hold investor in this company, which I wouldn't recommend, but if you were, here's where it started on the left edge, here's where it finished on the right edge, and that's a loss of about 17%. But using the MetaStock Trend Trading Toolkit, that same period of time, same stock, returned 67.8%. 7 trades, 6 of which were winners. This is a long and short trading system. So you're going to run one exploration, and it will come up with both long and short picks. And you buy the longs, of course, you sell the shorts, and you can see that all but which is the one that didn't work out? Might have been this one. No, that one hit the bottom lower band. Anyway, one of these trades went for a loss, got stopped out before. In any case, the rest were winners, 6 out of 7 winners for a 67% return. And here's one more look, and this is a more recent look at one of my favorite trading stocks, which is Acadia, which is a biotech stock. It's up and down a lot, and this is a great stock to trade on an intraday basis as well, using our 2 micro trend explorations, not explorations, they're the expert advisors. And if you look at left edge to right edge, you're looking at about a 7% loss for the buy and holder, but using the Trend Trading Toolkit, almost 170%. Wow. 11 trades, 2 losses, 9 wins, and you're going to get, the system will fire off a signal to buy or sell every time it makes one of these extreme moves. Now here's one of the losses where it made an extreme move, started to head in the right direction, then fell off a cliff. You're going to get stopped out of something like that for a reduced loss. And this one also went for a loss, this long here that got stopped out somewhere down here. But everything else is on the win side. Okay, so that system is in your Trend Trading Toolkit. That's called mean reversion. And it is, from my testing, in fact, from all the testing I've done, and in those who use similar systems like this, it is the most profitable. I mean, it's really an awesome system. Okay, and just to wind up here, I wanted to let you know that if you wanted to try out some of our Dr. Stoxx offerings, we have daily and weekly newsletters that go out. We have trading manuals, and we have trading webinars. If you use half off in the discount code, you're going to get 50% off your first monthly or quarterly payment for any of our newsletters. And that's good for about a month. For the month of March, that's good, and you can do that today if you wanted. And if you are a long-term investor and wanted to look at that, you can go over to ichthusletter.com and sign up for we just have the one monthly letter there, but it's a packed letter. You're going to get our market direction indicator, and once that market direction indicator turns bearish, we take you out of stocks, and we put you into bonds and some other very, very safe havens. Last time we got a bearish signal, the market went down, we made 14% in our safe haven portfolio, and we put that cash back to work in stocks. We were able to buy back our stocks at a much lower price. It was just a beautiful thing. So we're averaging over 60% per year in that letter, but you're only making about a dozen trades a year. So, okay, so that's it. I'll turn it back over to our host, and if you have any questions, feel free to email me, but otherwise, God bless everybody, and we'll see you soon. Thanks. Bye.
Well, thank you so much for that presentation. Again, and Dr. Carr said this a couple of times, but it's a system that actually tests very, very, very well. And it gives you multiple opportunities as far as your intraday trades, as well as longer-term trades. Now, when you look at a system like this, it really is all-inclusive, and it's a very, very large toolkit that we have, and we've had it around for quite a while now. And it takes methodologies, and we reworked it a couple of times since it first came out, but it's taking methodologies from not only 2 of his best-selling books, but it's also incorporating some of the methodologies that are included in his third book. One of the things I wanted to do here is just kind of give you a quick outline. You know, Dr. Carr only had you know, about an hour to cover some of the things, but I wanted to show you everything that is included, a breakdown of everything that's included in the toolkit. His long setups, you're going to get 5 explorations. His short setups, you're going to get 6 explorations. And then the additional 4, which include the high beta scan and the pre-filter exploration that he was talking about a little bit earlier. So 14 explorations in total. The long setups as far as expert advisors, and I'll show you a picture of that expert here in just a moment. The expert advisors for your long setups, you get 5 of those, as well as 5 for your short setups, as well as your real-time, so your afternoon reversal, your bread and butter, so your real-time expert advisors, shorter-term trading, you're going to get those as well. There are 6 templates included with the toolkit, so again, it is really an all-inclusive toolkit. I did kind of want to show you a little bit of the commentary here. I just have a photo of it right now, but again, the commentary, this is one of the things that really sets MetaStock apart, and especially when we team up with someone like Dr. Stoxx, you know, all of those methodologies. When you learn a new system, it's very important that you can apply that system with ease from the get-go. You know, eventually, once you start trading this system over and over again, you're going to understand exactly what the signals mean, you know, what your stop should be, etc. But it's always nice initially when you're starting to have everything really printed out for you so that you can actually walk through every step of the trade. So a commentary, you know, this is a good example of a commentary that's in the toolkit. You have your setup explanation, you have your suggested entry price, your percentage stop, your ATR stop, your target, as well as the ATR target on top of that. So it's really laying out the entire trade for you. Now, normally the Trend Trading Toolkit, that says Toolkit, but it's Toolkit, trust me. Normally that is $3.99, but since you guys have attended this webinar, we're going to give you a special price today of $2.99, so $100 off. Obviously, you know, definitely something to have, something to use and really get into. There's a lot of great methodologies in this toolkit. We've said it a couple of times before, but again, it really is one of the most comprehensive toolkits we have. Now, to order this, you can just give our general sales line a call, 800-882-3040, or you can come into sales chat and just mention that you were on the webinar, metastock.com/sales chat. Mention this webinar and they'll go ahead and give you the discount. If you have questions, feel free to give us a call or visit Dr. Stoxx's website. You know, we're both very, very happy to help. Again, thank you very much for attending this webinar. Let us know if you have questions. Go ahead and call in or chat in and pick up this add-on. Mention this webinar though when you do, so that we can apply that discount. And we will see you next time. As always, happy trading.